Welcome to the Financial Beast Podcast, the practice owner's guide to maximize practice value and create personal financial success. Your host, Eric Miller, is the co-owner and chief advisor at Econologics Financial Advisors. He is also a national speaker and published author in financial matters focused on practice owners at every phase of ownership. Hello, and welcome to the Financial Beast Podcast, where we help practice owners learn how to turn practice profits into personal financial wealth. We are your hosts, Mendy Heinz, and I have Eric Miller here.
Eric Miller.
And we are your hosts for the Financial Beast Podcast. So today we wanted to talk about trust. I know. I wanted the pregnant pause there because it's a big topic.
Trust.
Who do you trust? And why do you trust them when it comes to financial advice as a practice owner? So we're talking about financial information, financial decisions, advice, and why. So before we get started with that topic, though, I just want to remind you to subscribe to this podcast if you're not already a subscriber. Make sure you like this podcast after it's over because it's going to be amazing. It's going to be amazing. No, you can't say that. And I want to make sure that if you do love it and you love someone else, make sure you share it.
Definitely do that. Definitely
share this with colleagues, friends. This information will be helpful in helping you become a financial beast in practice ownership. Yeah. So without further ado, let's talk about trust.
Yes.
So
who do you trust?
Oh, that's a really good question. I would have said in the early years, I only trusted myself.
Yeah.
Yeah.
All right.
That would have been my answer. But then I became a financial advisor.
Yes.
So I think the obvious answer there is financial advisors, but they're not all created equal. So that's kind of one of the things you learn early in this business is that not all financial advice is created equal.
It is interesting because when we're dealing with practice owners, building trust is not an easy thing to do, especially when it revolves around your money.
It
really is.
It's a big thing.
And I can see why. I had like 3 conversations with practice owners last week.
You did?
How many of them got ripped off?
All of them?
3. 3 of them got ripped off.
It's a sad truth.
I see why people are untrustworthy when it comes to financial advisors and practice managers and whoever it is that you put in control of your money.
Yeah. Well, and we'll talk a little bit about today who you should trust and, what characteristics they possess.
$200,000 he got ripped off.
We've seen it though. We've seen millions.
And you know what the worst part about it was?
It was a friend.
This is a horror story right here.
Oh no. Okay. Give it to me.
Here's the bad part about it. He got ripped off for $200,000 from a practice manager. So in order to get that money back, what does he have to do? He has to sue the guy.
Right.
Take him to court.
Yep.
And I guess the court said, or the attorney said, look, you can do all this. It's going to cost you $250,000 just to go get the money back. And that guy knew it when he was doing he was ripping him off that whole time.
Of course he
knew the system. And he's like, you know what? Forget about it. I'll
just cut your losses. And move on and be a little jaded.
Yeah.
Right? That's the problem. Then is when you really do need financial advice in some way, shape, or form. Now you don't trust anybody. And you get stuck.
Yes. So this is where, you have to pay attention to your money lines and you just can't give
all the control
over to somebody else.
Yeah.
You got to keep at least some attention on it.
That's right. And that's the thing I think when I'm talking with a practice owner, and we've talked with thousands, I've talked with thousands, you've talked with thousands, that this is not an area that they're comfortable with most of the time. And so they are happy to give up the control because they think, at least I don't have to handle it. This is something I'm good at my profession. And the problem with that is is it just opens them up to being swindled.
You better hope that that person is trustworthy. And more often than not, you get someone on that's not. And so I know we're supposed to talk about trust.
Yeah.
We're talking about
not trust.
untrust
but that's
right now.
okay, because I think that's the reality.
Yeah.
Right.
Is.
I think, and so we recognize that as financial advisors to practice owners, we recognize that things have not always gone well for them in this area, whether it was an accountant, an attorney, a family member, a staff member, as you're pointing out, another financial advisor that maybe just didn't give them good advice. So although they really, really want help still,
They do.
they're tough to make a decision because they don't want to make a financial mistake like they have in the past, right?
Yes, I think so. And it does, gosh, there is a difference though between an advisor or a CPA maybe not giving you the best advice.
Yeah.
And then someone just straight
Ripping you off,
busting you out for like 50 grand or 100 grand.
I know.
That stings right
It
there.
definitely
I think the other one's like, okay, I have an incompetent CPA who missed $20,000 of tax credits that I could have taken advantage of, but didn't. All right. I got it. Man, when someone like rips you off for like 100,000.
I know. But you know what? I'm going to say something unpopular. Unpopular? Yeah. I'm going to say something very unpopular. Ready?
Yeah.
There's a little responsibility on the other end.
How dare you?
I know. I'm sorry, but it's true. And this is tough for anyone. I mean, I've been ripped off. I've given, a friend money and they never paid me back. But there was some responsibility that I had to take and say, okay, well, I didn't set that up right. Maybe I shouldn't have loaned it to them. I've not been given good advice before, but I really left it all up to that person and had no knowledge of my own. So there's that responsibility of kind of having your own knowledge and a reporting system, right? To have some oversight.
That's the point right there.
You can still give away the delegation
100%.
of, right?
Yeah.
And you can still talk to people and get their advice, but you have to have some of your own level of knowledge. So that's the responsibility point. I think that it gets missed because it's what has been done to me,
The responsibility point was I should have created a system in the business that was overseeing the finances where maybe I'm not doing the bookkeeping. I'm not having to input all the transactions. I'm not having to balance the checkbooks and all that. But I do have a system in place where I can oversee it.
Yeah.
I can oversee. And then there's indicators.
Yeah, of course.
There's indicators, like there's metrics and
You have to know
measurements.
what it should look like.
Yeah, you should know what it looks like.
Yeah.
And like, okay, well, I noticed my accounts are starting to dwindle down a little bit and I haven't seen this. Go inspect.
Yeah.
What's going on right now? But so yeah, you're right. Anybody that gets ripped off, I mean, I do feel for them.
Of course. No, it stinks.
I do. It's like,
It's no good.
the responsibility really came down to that you gave responsibility to an irresponsible or a toxic person. And that was what happened.
So let's talk about that. Let's talk about some of the characteristics that you should give responsibility to.
Okay.
So let's just name some characteristics of somebody that would be trustworthy.
Well, they've demonstrated in the past that they're trustworthy. You're talking to a practice manager or a CPA?
I think for anybody, so you want them to have the same philosophy about money and about collections and about.
Well, look how they handle their own finances.
Oh, that's a big
probably
one.
a pretty good idea. So if you got someone that's, constantly in debt or always asking you for money or is, always complaining about, their credit card debt or something like that, then, look, it's probably not somebody that you want in control of the finance lines. I mean, they don't, but they do have to be you do want someone that we talk about that bulldog mentality, on the finance lines. You can't have someone that's like capricious, someone that's a big word, by the way.
That's a big one.
Yeah. That's carefree. That's just kind of it's no big deal.
Who cares?
Or reasonable. And we say, and reasonable has always been, has a positive connotation. Oh, he's a reasonable man.
Yeah, no.
Right. He can, but that's not it. Where reasonability is like something's bad and you just try to justify why it's bad. And and it's not a good reason why.
No good reason.
Yeah. There's no good reason why. It's just bad.
Yeah.
You know, so
it's either bad or it's good.
Yeah. It's like, okay, when you're reasonable about it, you're like, try to explain why it is. But
justify it.
Yeah,
That's
exactly.
Right.
So that's no good.
Yeah.
So you can't be reasonable on your finance lines. 100%.
That's right.
It's black or white, like your profit margins, your growth rates, your, you know, how much your expenditures are in these different categories. You know, I mean, you're going to have points and times where they don't always line up, but overall these things should be in place.
Yeah.
So
yeah, absolutely. I think that's good in the practice. Now, I think when you're talking about hiring professionals like financial advisors, accountants, attorneys, people like that, you know, they should, I think one of the characteristics that I would definitely look for is the same philosophy.
Yes.
Right. About or at least a philosophy you can agree with.
Someone has a philosophy.
Do
you have a philosophy of money?
That's right.
Yes. Where's it come from? Right.
Right.
Like, how is it produced? What's it take? How do you control it? How do you expand it?
Yeah.
How do you acquire it? You know, what's your philosophy on money?
Yeah.
Yeah. I think that's definitely something that you want to have.
Well, and I think what we see a lot of with practice owners specifically is they don't really have a financial team. They usually just have one person.
Yep.
Right. Which is typically their accountant or CPA. Right. Which is not bad. You need one of those.
This is your bash CPA episode right here.
Oh, no, it's definitely not. You know, here's the truth of it, though. That can't be the person you rely on for all financial decisions because why?
Well,
tell them why, Eric.
Go deep in the rabbit hole on that one right there. Well, I mean, most CPAs are historians, right? So, and that's not even that's a bad generalization.
That's
but
true.
Their viewpoints are looking at data that's already occurred.
That's true,
and it really isn't looking forward to what the practice is going to do.
Yeah,
and making sure that there's planning done to reduce the tax liability of the person.
Yeah.
That's not really done that much.
Well, and even looking forward, what I've seen, which is not wrong or bad because this is our job, is they just want to save the person on taxes, right? So typically the advice is, you know, well, just don't make a lot of money. And that's you know, like the more money you take out of the practice as income, then the more taxes you have to pay.
For sure.
It makes sense in their world, but that's not the world that you live in as a business owner. You can't rely on that type of advice only because then what we typically see is most people are paying themselves properly.
No, they're not.
Right? Enough.
No, they're leaving.
Paying themselves. They're leaving so much money.
They leave a lot. Some people do that. Leave a lot of cash in the business. Mm-hmm. And maybe that's by advice, or maybe they're just scared to take it out.
Or maybe they don't know how to take it out.
Maybe they don't know what to do with it.
Yeah.
I think that's where most people are. They're like, I have all this cash sitting in my business accounts because I don't know what to do with it. Mm-hmm. And, you know, I don't really want to pay tax on it. But funny thing is they probably already pay tax on it.
Well, yeah. I mean, it's coming out one way or the other. It's just profit sitting there in the business doesn't mean you don't pay taxes on it. Nope. Nope. And you don't want to not make profit. So, you know, of course.
But what was it? We did the survey. Was it 40% of most practice owners trusted their CPA for their financial advice?
That's right.
40%.
That's a lot.
That's a ton.
That for all of their financial advice.
And now I see why most people, when it comes to their households, are in the condition that they're in.
Yeah.
Because they're listening to the advice of their CPAs. Mm-hmm. And that's why most of them have huge retirement accounts, max fund their 401ks, buy a bunch of equipment that they may or may not need.
Those are all tax strategies.
Right? Those are that's it. And they don't have much in the household because they've been told, don't show a profit, more or less, and certainly don't take profits to the household because that's just going to create a tax problem.
Right. And it indeed does create a tax problem.
It should.
Right?
Yeah.
So it's not wrong. It's just not correct.
It's not wrong, but it's just not correct.
I know. Did I say that out loud? And it's recorded and there's nothing I can do about that.
We got that one. I know what you mean.
You know what I mean?
I know what you mean. Yeah.
Because
it's not, well, it would be, it's incorrect depending on what you want to accomplish financially in your household.
Right.
Like if you want to have a household that has multiple income sources, you're free of all bad debt, all these things that we talk about, then you have to set up a method where you're expensing your profits to your household to do these things.
Yep.
And yeah, it does give you a tax problem in the household level, but that's what the CPAs are there for, then to try to figure out a solution of how they can minimize the effects of that.
Yeah.
But most people don't have a tax problem. They got an income problem.
Always what we see.
Yeah. So,
Really.
Unless you're making over $350,000, $400,000 a year, you don't have a tax problem.
No.
So
that's right.
That and personal income.
Yeah.
So I think that's the first part that, we want to make sure we impart upon you is look, that's not really a tax problem. When you get over 400,000, then you start to become, in a zone where you're going to have to pay 38% in, effective tax rate.
Which is when you hire a tax strategist.
Yes. This is when you need someone that would.
An accountant is not a tax strategist.
No, but why don't they have tax strategists as part of their resources? I don't understand that. Why do I have to go out and find these things? Why doesn't an accountant who has access to all of these professionals that know the tax code, but yet I've not met one CPA that had, maybe a couple of them, I can't say that actually had tax strategist resources for their practice owners and said, hey, look, I'm not really good at tax planning, but these guys do have some strategies that could work, and I'll refer them to you. Mm-hmm. There are some out there, but the vast majority don't do that.
No, and we could go on and on about that.
We could. That's a tax. That
is more of a tax podcast. But let's talk about though the hiring professionals and when you should do that, because we preach that you should have a financial team.
Yeah.
As a practice owner, you can't just do it yourself, and you can't just have a tax preparer and maybe just some legal advice from LegalZoom. That's not how you can survive and build wealth and build an empire.
Yeah.
So, we were talking about this just a couple of weeks ago or a week ago about the different levels or different phases of ownership where you should have certain types of professionals.
Yes.
So I think we could kind of go into who do you hire when, because it's always the question is when?
Yeah.
When should I hire these professionals, different professionals?
So you definitely need to build a financial team.
Yeah.
I think that's established.
From the start.
Right?
So the minute you started your practice.
You should start building your financial team. Mm-hmm. And that team does consist of certain professionals. Mm-hmm. And, I think depending on where you are in your ownership phase, some people are going to take priority over others in different phases. That's what we talked about.
Yeah, absolutely.
So, do you want to start with that?
Yeah, let's do it.
So if you're first starting, you just started your practice or you're thinking about starting your practice. So, ideally what we have is, you're going to need you are going to need a CPA to help you with the books.
Yeah.
A bookkeeper, bookkeepers and a CPA. Those are two different functions, by the way.
A lot of people try to do their own bookkeeping in the beginning.
And that's not a bad idea just to kind of get used to the finances and understanding how to utilize that.
Agreed.
So I think that someone should learn that. But you will need to have, a bookkeeper and a CPA help you with that aspect of
Establishment.
it. 100%. And, if you can find someone in your industry that has worked with other practice owners in your industry, I think that's advisable to do as well.
Yeah, a lot of people try to just go with whoever was doing their taxes before, a family friend.
Yeah.
Might not be expert in business business or your own
that
industry.
type of business.
Right,
so
exactly.
They don't know, hey, certain write-offs you can do that I've seen other people do. So there's just some advantages to that.
Yeah, definitely.
So I think that would definitely be, number one that you would need. You're going to need a business attorney because you're going to need to incorporate and you're going to need to figure out what and those two are going to have to work together to say, okay, this is why you have to look forward to how you're going to transition, even though you're first starting, because how do you want to incorporate so that when you transition, you get the most favorable tax as the practice grows and then when you exit? Most people don't even think about that when they're first starting.
That's a whole nother podcast, transition planning.
But this did happen with I had a client that got set up as a C Corp, been a C Corp for a long period of time. and now is just looking to switch over to an S corp because she wants to sell, but she can't sell now for 5 years because of that. So again, that's the a CPA that knows the long game is pretty vital when it comes to that.
Indeed.
And then definitely part of your team is a practice coach, practice management coach. I think those three, when you first start out, absolutely.
Don't try to reinvent the wheel.
No. Or a mentor.
Yeah.
Right. Or a mentor. So I think we talked about, we need a practice manager or a mentor, someone that we can lean on to get business advice.
Yeah.
Or strategy of how to learn how to do this. And you're going to learn a lot on your own.
School of Hard Knocks.
But there should be some structure to what you're doing.
Yeah.
And just, you cope, and then you get some organization in, and then you go back to, everything flying around you.
Yeah.
That's just part of the journey, I guess.
Yeah.
But I think those would be the people that I would, when you first start up, that would be the hierarchy.
Yeah.
Of my team.
Yeah, absolutely. And probably only, within 1 to 3 years, then you would graduate into the next phase of ownership, which we kind of talk about. There's 3 phases of ownership. There's startup, then there's that expansion and transition, and that's the longest phase. And then there's exit, which is a super short phase, right? So we've got the startup now, and we're kind of in that. Now we're expanding.
So let's say 2 years, let's say 1 to 2 years.
Okay.
So usually
Don't stay in startup too long.
No, not really. Yeah. You want to you're going to see some a big jump in growth if you're doing the right marketing. Yeah. If you're doing,
you're listening to your coach.
Yeah. You're listening to your coach, and you're developing some systems, and you're getting your name out there, and you're getting referrals and all that. I mean, you're going to go from 0 to $500,000 in revenue pretty quickly.
Yeah.
Because one practitioner, I would think, can produce, depending on your industry,
500 to $1
million. Depending on what you do. So, but after that first year, now you really have to start looking at this. This is not a job anymore. This is an investment.
Yep.
This practice now.
It worked. Somebody showed
up. And they wanted help, and you gave it to them. Yeah. And then more people and more people and more people showed up. And you're like, oh, okay. So then, of course, you start hiring staff.
Yep.
So again, having a practice management consultant is really important to help you. How do I bring on staff? How do I train them? So that practice management consultant is super valuable.
Yeah.
Okay.
Yeah, indeed.
But at this point in time, here's where money starts to, now the business is growing and money gets lost.
Bye-bye.
Right?
What do you say? You always say it's like a toddler.
It's like a toddler at the mall. Yeah. Money's like a toddler at the mall. So if you take your attention off of it for 2 seconds, and they're 7 stores down, hanging over the other edge, you're like, what happened? So
that's your money.
So this is where, and not only that, but now we switch gears because most practice owners, and we tell them, look, I know you think this business is your primary, is your most important asset, but it's not.
Nope.
Your household is.
Yep.
So now we have to figure out a way now to kind of switch gears a little bit and say, all right, look, you have this business, you're spending all your time in here, but we need to really make sure that the household's getting taken care of. Mm-hmm. And that means that we're setting up the systems where you're expensing profits because you don't want to be dependent upon the business for the next 25 years.
No.
So you might as well start after that first 2 years, I would say, start getting the systems in place where you can start expensing profits to create other income sources and pay off your personal debt and just get the household into a really optimum financial condition as well.
Well, and that advice comes from a financial advisor who really understands your business and your household and the importance of those two and the hierarchy there, So I think that's where now this is the phase where you got to start, like you said, you have to start paying attention to those. This
is when you fire areas. Your old buddy financial advisor at this point.
Set up your little IRA.
Set up your little
529.
Set up your little 529 plans and your handles your simple IRA and got you that $100,000 life insurance policy that's like.
But it's good. I mean, it's good to have started with that.
I'm just being cynical right now.
But
But I will say now you have to confront the fact that you're just outgrowing that old team.
You're playing a different game.
You are, if you want to.
You're not an employee anymore.
Nope. And now you really do have to, I think the first hire would be, I need an industry specific advisor that not only understands how to improve the value of my business along with my practice management coach, but also is making sure that the household is going to go to a whole nother level.
Yeah.
Right.
Well, and the reason is because your business is, as you said, you're an investment.
Yes.
Right. It's an investment asset. And so you can't look at it anymore any differently than that specific, what is the purpose of owning this business? Because it's not for heartache.
Nope.
It's not for pain and suffering, because you're going to get a little bit of that, managing staff and clients or patients. And so, it's there as an investment asset, should be producing, should be focused on in a different way. So the practice management plus a financial advisor who understands your business.
Yep.
Those are two key individuals. You still have your accountant.
Still have the CPA.
And your legal advice.
And your legal advice. You probably need to bring on some additional legal people, maybe for estate and some other things.
Yeah.
But I mean, for the most part, that would be your financial team.
Yeah.
And, have a strategy, one strategy that you're following. And I think when you do that, it just allows you to expand.
Yeah.
Because all these things are going to start happening to you. You're going to start thinking about, well, how do this first practice work? How do I get the next one?
Yeah, exactly.
And what are some additional strategies I can use to, now I'm starting to make a lot of money. How do I minimize my taxes? Or
questions like, I want to buy a building. How am I going to buy a building?
Yeah.
Should I expand?
How do I do this? Should I buy this equipment or not?
Financial advisor should know the answer to those questions.
Absolutely. They should have experience in working with other people that have been in the same situation and said, this is what this person did, and it was very successful. These are the people that he aligned himself with. This is the strategy that he followed, and it worked.
Yep.
And that would eliminate a lot of BS that people have to go through.
Well, I think it also eliminates some pain and suffering, because when we meet some practice owners that have been 10 years in practice ownership, they're still working with their old financial advisor, or maybe no financial advisor because they've already fired them, or they've had 3 accountants since then. I mean,
Yeah.
It's a reality. And the problem is that their accountant is saying, you're good. They're making a lot of money. Their financial advisor's like, you're on track for retirement, whatever that means. And CPA, it's not really, good advice, CPA
is still looking at them as a startup,
right?
As opposed to someone that's got a $2 million, $3 million, $5 million business.
Yep. They're just warning them, hey, you're going to have to pay taxes at the end of the year. And so you might want to spend some money here right now before the end of this. Put some money more in your retirement account. So that's the problem.
It is a problem and it's just a reality of life. I think sometimes you outgrow the team that you have, and you just need to be able to recognize, is this person going to keep up with where I want to go?
Do they know? Do they know what the next level looks like?
Yes.
Is the question I would ask. Do they have other clients who are at that next level that they can, glean some experience from? So
do they match what I want, where I want to go? I want to get to a $7 to $10 million net worth. These are the things that are going to get me there. Do they align with that? Or are they still going to give me advice for someone that's doing, that wants a $1 to $2 million lifestyle? Yeah. I mean, it's a fair question to ask.
It is. Yeah. Absolutely. Yeah. Experience is key there. So that's how you know who to trust is really based on their experience and by asking the right questions, because, and getting your own base knowledge.
And their competency too, and whether or not they've worked with other people and have gotten results.
Yeah, absolutely. And then right before you exit, you'd want to add like a broker, merger and acquisitions person, right, to that team.
You definitely, yes. So you need, I would definitely hire a mergers and acquisition, a really good mergers and acquisitions person. That has done a lot of deals, and depends on the size of your practice too. Yeah. Like if you have a big practice that is going to get 10, 15, $20 million, it's just worth it because of all the red tape, everything that you don't know. Yeah. they're going to have a lot of experience in how to help you navigate that.
Yeah.
If it's a smaller sale, if it's a buy-in, if it's something like that, maybe you can get away with your like your local attorney just to review some of the purchase agreements and those kinds of things. But if it's a bigger sale, I think getting a mergers and acquisition person would definitely be important.
Yeah.
And maybe just as, your tax advisor needs to be pretty competent as well.
Well, and same with your financial advisor, right? So you want these people to keep up with what the end game is, and you want to make sure those people know. So if you're like in that phase right now and you're like, I don't have these people.
That's a good point, because financial advisors, if you're working with the same financial advisor, then all of a sudden you get $10 million.
What now?
And all he's known is like, mutual funds and these kinds of things. Oh boy.
You could be leaving money on the table.
Well, that, and you put yourself at a huge amount of risk, because he's going to put you in what he knows.
Yeah.
Okay. He's not going to look
at what he's getting paid on.
Yeah. And he's not going to look at like private placement deals or how much money you're keeping in with the equity group if you're selling to corporate, or, how much you're going to get paid in salary, or your real estate. Not really going to know that.
No, because that's investment planning versus income planning.
Yeah.
Right. So there's a difference. And so, which is a whole nother.
That's a whole other podcast. But it is. But I think that's your expert team. And you're going to have, people are going to have different hierarchy depending on where you're at.
Yeah.
But I think
that's good.
Yeah.
All right. So what does that mean how does it relate to becoming a financial beast? Just picking the right team. I mean, I think that we've kind of gone over this, but I think it's more just to become a financial beast, you're going to have the right team.
You just have
to. And you can't depend on yourself. You can't do it yourself.
Nope.
Not if you really want to get to that next level. And hiring the right team is going to be the key for you.
Align yourself with an advisor or people around you that match your intensity level of where you want to go.
Yeah.
And make sure they're competent.
Yep.
And then roll with it.
Just follow their advice.
That's right. Follow their advice.
Don't fight it. They might know better. That's a whole nother. Okay. All right. Well, that's all we have time for today. Thank you, Mr. Miller, for your expert knowledge. Stay tuned for our next episode to help you become a financial beast in practice ownership. Thanks so much. You have been listening to the Financial Beast podcast, where we talk about how to turn practice profits into personal financial wealth. For more information on how to become a financial beast in practice ownership, visit financialbeastpodcast.com. You may also want to call the office at 727-588-1540 to request more information on becoming a client or arrange to have Eric speak at your next event. That's 727-588-1540 or financialbeastpodcast.com.